Hello and welcome to the home of high probability trading. My name is Tim and I'm one of the traders here at the Live Trade Room. And what we're looking to do during the session is to trade the US Open fully live and interactive for you. So we go through the whole process involved in being able to identify those high probability trades, where we're looking to get in, where we're looking to perhaps place our stop loss, how we're looking to manage the trade, what our expectations are. So going through the whole gamut almost of the I suppose a full trading approach. So just before we move on, if you are interested in genuinely learning how to trade the financial markets from a position of, I suppose, knowledge and understanding in terms of why markets are moving the way that they are, and being able to capitalize on those market moves, and most importantly be prepared for those moves, then we can certainly help you as an organization. It's what we do every day. So feel free to go to our website, thelivetraderoom.com, for more information. And we've got a very large range of products and services depending on how much time you have available, all at very, very low cost. So hopefully you'll find that useful. So without further ado, let's start with a risk warning and let's see if we can make some cash during the session. So please see our risk warning currently up on screen. For us, it's really important to embrace risk. We know losing trades are a fundamental part of trading these financial markets. Excuse me. So they are a fundamental part of trading these markets, and we should embrace that risk, but manage it and control it. Excuse me. Apologies. So hopefully you've had an opportunity to have a look through a risk warning. So the first thing we do when we trade financial markets is we want to make sure, is there any major news events that are likely to impact our trading decisions? So we can have a look at sort of the news flow for the session. We can see if we're impacted there. I suppose it's worth just taking you back really to yesterday evening.
The mixing peso there, not much change following the CPI number.
That's our squawk, so we'll come back to that in just a moment. But sort of mid-afternoon, we had crude oil inventories. We were expecting minus 2.2 million barrels number, and we actually saw a slight improvement of that. And it's green in color because it's supportive of price, or it has the potential to be supportive of price. So we saw a little uptick yesterday. We'll have a look at it in just a moment. So that's crude oil. We also had Biden speaking about his infrastructure bill. So it's obviously a $2 trillion plus infrastructure package. It'll have a sort of a long-term view. It's not necessarily like an influx of capital at any one little point like we're seeing on the monetary side. We are seeing this is a lot of capital that will be slowly rolled out for infrastructure-based projects, I think over a 15-year period. So very, very significant. And he was just explaining a little bit more about that. And looking to keep pace with China. China was a bit of a theme, which, we know that the Chinese government have been accelerating with their policies to varying degrees of success. And this is the US's attempt to actually try to get a little bit more involved in the growth story. So it's a huge stimulus bill, but like I said, just stretched out over the longer term. We had some very interesting FOMC meeting minutes last night, and there was a high degree of consensus across all members. So what that basically means is the Fed are getting full support from its members in terms of its monetary policy, lower rates for lower, and being very accommodative on the monetary policy side, and the quantitative easing bond buying programs and things like that. So we've got a very supportive Fed and FOMC. So that's a little bit of a review. We'll have a look at the price action in terms of yesterday's move, as we were talking about the pound weakness and the equity potential strength. So we've started to see a little bit of move in those. We have unemployment claims impacting the US dollar. If I just show you obviously the trajectory is very much to the downside, and we're now looking to see new lows as far as unemployment claims are concerned, and that would be very much in keeping with last week's non-farm payroll numbers. So we're expecting 682,000 unemployment claims, and let's see, it's probably likely to be less than that, but we shall wait and see. So again, that will be quite supportive for the US economy. Today at 5 o'clock we have Fed Chair Jerome Powell due to speak, so we just need to be mindful of that before getting into any US indices or US dollar trades, just in case it's likely to be potentially a volatile event. So we'll have to wait and see on that one. Okay, so that's at 5 o'clock. So without further ado, let's get up our trading charts and we'll just go through briefly what we were looking at yesterday. So we were looking at the euro dollar looking to break above that 18.97 level. We kind of failed to get up to that level on a few occasions. So we had the initial break to the upside, followed by the reversal, pulled back to these new lows, and that's kind of the picture really at the moment for the dollar. So certainly not explosive by any stretch, and there's been a threat really from a little bit of dollar strength within these markets. There's definitely a couple of rejections to the upside as far as the euro dollar is concerned. So what I might just have a quick do, what I might do just quickly, we were looking for a sell trade in the dollar Swiss, and the euro dollar, which failed to materialize. The big moves were pretty much across the pound pairs. So we were looking to get into this market, high probability buy trade above the 85.88, and we're now up to the 86.33. So a nice move in that one. And the same situation really for the, it was a high probability sell trade in the pound yen. So we've been looking to sell this market. Okay, that was a previous level that we were looking at there, so I'll just take that out of the equation. And so we're getting this sort of momentum move continuing to further squeeze to the downside. So we'll have a look at those in a second. And the other two trades were a breakout to the upside for the S&P 500 above that 40.85, and the same level for the Nasdaq is the 13.670. So we've seen some nice moves further to the upside in those. So we'll have a look at those in a little bit more detail. So from last night's trade plan session, we were able to look at that British pound weakness trade and the Nasdaq to the upside. So we're still able to keep some of these trades. So what I shall do is we'll keep the euro dollar just to see if we do get that dollar strength trade beginning to creep back in again. What I need to add in here is the pound dollar. So let's drag this across, and we shall have a look at this in a little bit more detail. So we were looking for, we've seen a little bit of buying pressure creep in today, but we've seen these prices just roll over to the downside. So we want to see if we get some continuation further lower as far as the pound's concerned. So we're still focusing on that pound weakness trade. So we'll go into those and see if we've got an opportunity. We might have an opportunity shortly in the pound yen. We did get into that yesterday morning with a stop loss above the 152, and we just got touched out of it by literally a couple of pips, and then it roared further lower. So we got very, very close with that sell trade there in the pound yen. And in fact, the mistake really is on our side. We should have picked a slightly higher stop loss. We were going for quite a narrow stop loss, and in a market like the pound yen, that's never really a good idea to go too tight with the pound yen. So actually, in hindsight, it was our fault. We should have had it above the 152.20. We went for above the 152.00, and of course we just got just taken out with just a bit of a small bit of intraday volatility there for the pound. So it looks like we're going to get another move. So it might be another focus on the British pound in terms of weakness, and we'll have a look at the equity markets as well. And we just want to monitor what's going on with the euro dollar. Good afternoon, Finbar. Hope you're keeping well. So Finbar, are you in any trades at the moment? Yeah, what trades are you in? So you took profit and I got lucky, you think. Which market is it? The pound you're talking about? What I'll do is I'll put on the squawk as well.
Ukraine is unlikely to start a new Donbass offensive.
You see, there's a kind of a counterintuitive aspect to these markets at the moment, because we are seeing the equity markets push higher. So we are in a risk-on market condition, which would normally imply we'd see a bit of dollar weakness. Instead, it looks like we're potentially seeing a little bit of dollar strength against the euro, against the pound. We're seeing the weakness actually kick in quite considerably now against the dollar.
And we are starting to see some encouraging signs after the latest lockdown measures.
So we're just rolling over to the downside now. So really there is this dollar weakness aspect to these markets. The dollar CAD, not much going on there. The Aussie and the New Zealand are both strengthening today against the dollar. So we're not blessed with significant volatility in these trades. Yeah, okay, the pound yen. So you took profit on it. Okay, good. So you did get into that. Where is it? The pound yen. So yeah, really good trade to the downside.
We're just under 10 minutes away from the bottom of the hour and the release of the minutes from the ECB's March policy meeting. HSBC, in their note this morning, pointing out the ECB made no explicit changes to the size or duration of their asset purchases. The PEP envelope was left unchanged at 1.85 trillion. In response to the recent rise in bond yields, though, they did announce they expect the purchase pace to significantly increase over the next quarter. HSBC said this should reassure investors who are looking for a signal of the ECB's commitment to their pledge to preventing an unwarranted rise in yields. However, the need to have a governing council decision to do it could also undermine some of the flexibility that has made the PEP so effective in the past. They say the minutes should also shed additional light on the decision-making process and the discussion around this issue.
Just showing you the pound yen, the reason why we were interested in selling up at these highs. We've been off the back of a 5-month bullish trend for the pound yen. Prices started to reverse back up at 153, started to roll back lower. We were getting in at 152, and we're continuing further to the downside, and we've broken above the previous monthly high. So there's still further downside expected on this trade. So last night we were looking to get in below the 150.63. We had a significant move overnight, and potentially we're likely to see further downside as things currently stand. So let's have a quick look. Okay, great. And the euro pound, you're still in that. Good. Yeah, we're just moving sideways for now. What we can do with this trade now, we're still carrying a little bit of risk on this trade. Not too sure why that's the case. Okay, it's oh yeah, it was, sorry, it was just below the 8600. There's your 8600, and so we were just giving it a little bit of room, because what we want to do here at the live trade room is to cut a loser short. So if we identify opportunities that are failing to act as per our expectation, then we want to get rid of those types of trades, and other ones we want to let run. So again, if you look at this on the monthly, there was a really strong move to the downside, and now we're getting that reversal signal. So we can still expect further upside in this trade. So at the moment, we're just experiencing a bit of sort of indecision at these levels, with a strong level of resistance around these sorts of levels. So really, breaking above would just see a nice continuation trade further higher. Your stop loss was the 152.02. Yeah, that was our stop loss on the trade. So and we just got touched out of it ever so briefly. So the high of this market was the, sorry, that's today's high. So yesterday's high, yeah, the 152.03. So but like I said, our stop loss should have been above the 152.20. So it's a little bit more of an error on our side rather than kind of a miscalculation or whatever. So so we missed out on 2 days of selling in the pound yen, which is a bit of a shame. So well done on booking in that profit. So sorry, apologies, I do digress. So we're getting close to the cash open. I'm looking at the S&P just off screen, so we'll have a look at that in a second. We've got plenty of time. So so let's just we'll go through our little trade plan just to see what opportunities we're likely to find. I'm going to just remove this, because with the equity markets pushing higher, we'd expect the euro dollar to actually continue to the upside. The only thing is, if that rolls over a little bit and this sells off, then that will be actually a decent selling trade if the correlations fit. At the moment, they don't fit. So I'm going to just observe price action on the euro dollar, not really suggest a particular trade in any direction just yet. So let's start with the pound then. Let's see where we're at with this pound trade. So here is the daily time frame. Okay, so we're seeing this little move further to the downside. Okay.
We're 3 minutes away from the minutes from the ECB's March policy meeting. It's not always the cleanest release from the ECB. The comments are usually drip fed via the news wires a minute or so after the bottom of the hour. We should be able to get a hold of the full release though pretty quickly, and we'll go through that as quickly as we can to find any important comments.
Okay, so So we're in this downtrend, so really we're looking for opportunities to sell. So will there be this little rollover, further move to the downside for the pound dollar? That would be in keeping with this previous price action. So with that in mind, we can actually go down and have a look at it in the smaller time frames. We'll do a little bit of analysis on this. So we'll see that we're really struggling to close below the 37.24. We've got some important lows and also highs in this general zone. So the 3800 to the 3780. So there's like a 20 pip support and resistance zone. So this is where you can expect that rollover trade, which is what we've seen. The direction of the market is very much moving to the downside, and you can see prices bouncing off this level on a couple of occasions before you get the breakout trade, and then you get prices pulling back to that level. Except since then we've kind of gone on a bit of a sideways kind of move. So really we're just waiting for that next break to the downside below the 37.24.
1 minute till the ECB.
The 137.24. So this is a high probability sell trade below 137.24. 137.24. So we're only really, I suppose, 30 pips lower in real terms. So we can keep a close eye on that.
Seconds.
So will the euro pick up a little bit of pace? So we got the ECB monetary policy meeting account.
Nothing as of yet from the European Central Bank.
It's a very low impact event, so not likely to cause any major volatility.
4 minutes now on the ECB's website.
Okay, so we keep an eye on that.
An increase in the inflation risk premium at the current juncture. This suggested investors no longer only saw downside risks around the future inflation outlook, as they had done for the most of 2020.
So same analysis really for this.
The minutes say it was important to provide reassurance that the Governing Council would maintain an accommodative monetary policy stance for as long as is necessary and saw no risk of overheating. The view is held that the increase in observed sovereign yields have remained contained and to some extent decoupled from developments in the United States.
So 3 days ago we saw a nice move to the upside, and now we're just in this little sort of consolidation at these levels, and really we're looking for the breakout to the upside is our preferred trade for now. Just expecting a little bit more dollar British pound weakness, should I say.
ECB underlined that the flexibility embodied in the PEPP was symmetric. Special attention needed to be paid to sovereign yields and the risk-free interest rates.
So you can see the consolidation now.
Joined the broad consensus around a proposal that was put forward by the chief economist Lane, on the understanding that the total envelope was not being called into question in the current conditions, that the pace of purchases could be reduced.
So you can see the direction is very much to the upside. We've now gone into this sideways zone. So really, we don't need to expose this capital anymore. We can now book in a bit of profit
might not be sizable and
on the trade
to affect the broader financing conditions materially. Governing Council needed to avoid giving the impression of being too overly focused on sovereign yields or reacting mechanically.
Okay, so what we can do with this is we can bring our stop loss up to a profitable exit at the 86.16 level. So we're just booking in 20 pips of profit.
ECB Minute says it was argued that the higher real rates were not necessarily a cause for concern.
So it's 86.16 will be our new profitable exit. And there you go, you see the level just squeezed to the upside. So we're just booking in a little bit of profit. We're only booking in, what is it, 14 pips profit on that trade. So we just want to see this market continue to the upside if we possibly can.
ECB said with regards to the external environment, there was an upgrade of the outlook.
$86.16. Okay. Okay. Okay, let's see if we get that next move to the upside for the euro pound. The euro pound is a long-term trade from Profit Webinar also. You presume the stop loss will be lower. So if you're looking to get into it again, I think you said you're in it before, so stay in it. So what we've done is we've brought our stop loss. We did have a stop loss in place, and now we've got a profitable exit. So it's only a small exit, but we want to try and give it room because it does have more upside potential. We're just obviously having a little bit of a pause today, so we might need to be patient with it, and hopefully this can be a daily low that stays intact. That's what we would like to see, and then hopefully a little bit of bullish price action squeezing prices higher. But really it's a break above that. The important level for this trade is actually, okay, we can probably say is a close above the 86.54 level. Would be a green light to the upside. We just don't want to expose capital to the downside. You see, that's the thing. Is it long term? It's I mean, as you know, we try to identify reasons to get into trades, and then we also look to identify reasons to get out of trades. And like this is a good example to get out of a trade, for example. And whether this is for a small gain, for a small loss, for a big win, whatever the case may be, we don't want to be exposing any profit or any loss far below an important level of consolidation like we're currently seeing. There's just no need to expose capital like that. And you could look at it on the hourly time frame as well. You know, it's just sideways moving. We're failing to make new highs, we're failing to make new lows, and we're just drifting sideways. So let's see what happens next in this trade. So what I'll do is I'll just amend this trade here. So we'll actually put the 86.54, so we're much higher now. The 86.54 level. So that's our high probability trade to the upside, the 86.54. At the moment it's just squeezing a little bit lower. So we want to get prepared for that cash open in the US. You know, traditionally you would get, you know, those trading the European session, closing out trades, booking in profit, all that sort of stuff, and then look to reassert themselves in the US trading session, so you can get a lot of sort of what are called late day moves. A lot of that has been a little bit disbanded now over the last year or two. There's certainly sort of these markets ebb and flow in slightly different ways to what they kind of used to, I guess. We used to exclusively just trade sort of 3 hours from sort of 7:30 to 10:30, and then we'd trade again from sort of 12:30 to 2:30, 3:30, something like that. Now we're getting, actually, if you asked us what time is actually been probably pound for pound the most opportune time, it's ironically kind of on the European close, so sort of between 4 and maybe 6 or something like that. So that's kind of a strange phenomenon, and it's anecdotal for us. It's not empirical or anything. So we'll have to take that into consideration. So we've got a sell trade below the 37.22. The pound is just finding a little bit of strength. Same situation with the euro pound. Let's have a look at the pound yen. So the sell in the pound yen from last night's webinar is actually the 150.58. So it's just below this low, just sitting in here. So we're looking for prices to continue to push lower. So we've kind of tested these lows now. So is this a classic kind of W formation, which would mean like a strong reversal in this trade? Finbar, if you're still with us and you're in the pound yen, or did you say you took profit on that already? Okay, because this would be your new stop loss would just be above this high in here. If you're still in it, so we can expect prices to flush lower, but what it's done now is created a new high and low. So there's your breakout trade, there's your nice move to the downside, you get the pullback, and now you're getting that extended move to the downside. Sorry, let me just get this on the daily time frame. So yes, it is the 150.61. 150.61. So we had the breakout, we had the pullback very close to that level, and now we're looking for a close below the 150.20. So so 150.20. So we're looking for a high probability sell trade below 150.20, and we can change this now. So these markets can absolutely shift from strength to weakness very, very quickly. We've been looking a lot at the pound over the last number of weeks. It's continuing to grind higher, largely due to its effective rollout, really, I guess. And I'm just looking at the US indice markets just off screen, so we'll come on to those now in just a second. They are worth keeping an eye out for. So we have probably a 40-45 pip stop loss just above these highs. If we get that further continuation, you could look at above the 150.105, but that would mean it'd be like a 90 pip stop loss. So probably a bit excessive, but somewhere in between would be ideal. But we'll trade the opportunity if it comes. So HP just stands for high probability. We want to sort of talk about markets in terms of the likelihood of a positive outcome for us as traders. So you can see there's a bit of European strength coming in. So we're seeing that that dollar weakness trade kick in one more time. Okay, so these are a trade. What I'll do is I'll zoom in a little bit more in this price action here. I'll get rid of the one-click trading. Let's bring this up.
We're about to reset the broadcasters, meaning the players will show a fair for the next 30 seconds or so. Give you a heads up once we're back on.
Okay, that's fine. So let's have a look at the interesting. Let's just see what's going on with the S&P. So we do like these markets to further grind higher. It's just a case of just timing or entry, really. And I'm going to show you just what's going on. There was an opportunity 2 or 3 days ago for a short-term sell trade, so we'll be changing that bias. From last night, we were looking at buy trades above the 13,670 level, and as you can see, overnight we saw that constructive move to the downside. Sorry, to the upside, should I say. But look at what's happening. We've been watching this all day. We've been looking to time our opportunities. This is the NASDAQ. So when we do our analysis, we're interested in these highs and lows, and see how price action is actually performing in these markets. And what we can see is this is also a daily high just in here. If perhaps I'll show you this on an hourly chart instead. So here's your daily high, and we saw a nice constructive breakout during the Asian session. So the markets are pushed up to the upside.
Reset now complete. Looking ahead to US jobless claims in 40 minutes.
But since then, since that impulsive move, what we're seeing is markets attempt to push higher for a second time and fail. So that's quite interesting. Now, we may still get that move to the upside, but it allows us to be a little bit patient, really, with the trade. And as long as we're in this little sideways moving pattern, where prices are ranging from 13,752 to 13,700, so a 52-point range, or let's say a 50-point range in this trade. Let's look at it on the smaller time frame. So certainly over the majority of the Asian session and certainly the European session, this market has effectively been moving sideways. So we want to avoid getting into trades that are drifting sideways. So simply to avoid that, we're looking to buy above 13,752, or we could look for selling this market below the 13,700 level. The problem is we don't want to run into previous levels of resistance, which now become support. So we're likely to get a little bit of a bounce off these lower levels. So what I'm saying is there's an opportunity to the upside. To the downside, what it will mean is we'll actually look to buy this market at a slightly lower price. So we can monitor this, and we can change the label for this trade. So 13. So we're interested in the 5.2. So there's a high probability buy trade above 13,752 level, and we've been talking about this since 13,250. So a very decent sort of 500 pip, 500 point return from last Thursday, if I'm not mistaken. So we'll change this to green, just to signify that it is a buying trade that we're looking at now at this point. We're currently moving sideways. It's actually the same situation. I'm just looking at it off screen on the S&P, so we'll have a look at that. But that's our trade plan for the NASDAQ. So I'll put these all up on screen now in just a moment. So there's our buy trade for the NASDAQ market. So we've got we're keeping an eye on the euro dollar. We've got the pound dollar looking to sell below the 137.24. We've got the euro pound looking for that pound weakness. Currently it's strengthening ever so marginally, and we've also got the pound yen trade for a further leg to the downside, but it will be below the 150.20 down at these lows down here. So we can keep an eye on these. So the last market is the S&P. A couple of days ago, we were keeping our options open for a little bit of a rollover to the downside. We've had some renewed positive sentiment behind this market, so we've seen that uptick. And last night we were looking for opportunities above the 40.85. Now we're above that level. Let me show it to you on the hourly time frame so you can. So this is actually a new momentum all-time high for this trade, but you can see that we spent a large amount of yesterday just drifting sideways in this market, and in the Asian session we had a 4 or 5 hour sort of push to the upside, and now we're just getting the pullback trade. So we're pulling back to previous levels. So our bias is absolutely to the upside. So with that in mind, we're looking for a buy trade, but let's look at it on a slightly smaller time frame so we can try to get our entries a little bit better if we can. What we can see is we've created a low, so markets are pulling back. We've created a low. We've attempted the little bounce trade, and we've failed to sort of get above the 40.96, let's say, in here. We've just rolled back over, and now if we get a break of this level in here, there's your structural failure trade to the upside. So that for us means that's kind of a viable selling opportunity, buying opportunity above the 40.96.
Confirms the furlough scheme will be extended beyond May 31st.
So the 4100 is an important psychological level. So we might get, this is now a strong level of resistance. So we might get prices pushing up before we get that next leg to the upside, and that's what we'd be looking to trade. So we've got like a mini structure being created in here, and we're looking for, see if we get prices pushing to the upside, and we are probably 6 minutes away from the cash open. So let's see if some volatility comes into the upside. Where would we place our stop loss? Well, the safest place, and this is purely technical, is actually below this level. So it's the 40.62. So if we got in about 40.95, we are talking about a 30, maybe 34 point stop loss. That's what we'd be looking at to take this market to the next leg to the upside. And all the fundamentals are in place, and they have been for a good week or two, where we got almost a seal of approval for prices to just continue on up to the upside. Just to take on board the yield curve, you're probably hearing an awful lot about the 10-year note and what's been happening with that. Well, you can see this is a 5-day chart, and we're now back down to sort of 165 really. But we were up at 175 over a week or so ago. So the heat has really sort of just come off a little bit, largely off the back of the FOMC, or should I say the Fed, saying if the yield curve gets out of hand too much, if demand for bonds starts to fall off, although the Fed are one of the biggest buyers of bonds out there, but if the demand starts to diminish, the yield is likely to push higher, and that creates this inflation story, which is a concern for these markets. So inflation that gets out of hand is a bit of a problem. So the 10-year note is, as you can see, it's just calming a little bit. We've just sort of had this triple top, and prices look like they're just rolling lower again. So it takes a lot of the heat out of this environment. It might revert back to obscurity now pretty soon, but these prices accelerated at quite a fast pace to the upside in a relatively short period of time. Whoops. So it's from January, we saw a sharp incline, a bit of softening, and then the next leg, which was pretty significant, from let's say the end of January up to a peak, let's say sort of a 6-week period, we just started to see, and this is why we're hearing it an awful lot in the news. The yield curve is kind of moving from basically the 1% level to 1.7, so a very significant uptick in a very, very short period of time, and that's what freaked the markets a little bit. Now the Fed have come out and said, look, we can tolerate, you know, further uptick in the yield curve, and if it gets out of hand, then there's measures that they can adopt to deal with it. And the markets have seemed to have gone, okay, fair enough, we trust and believe in what you're saying. So we're seeing those conditions play themselves out. So there's definitely like a 4-hour bit of consolidation in these markets, as you can see, and that's what we're kind of talking about, really. So really you'd be looking at a stop loss of sort of 40.67, so about a 30 point stop loss, which is actually fine, because you can expect like a 1 to 2% positive risk reward, or should I say roughly a two times your risk reward on the trade. So that's all fine, that's all in keeping with our approach. And we've also got a couple of important levels of support before prices get down to these levels. So you want, if you place your stop loss here, this market will have to work really, really hard to kind of get down to that level. And don't forget the prevailing trends at the moment are to the upside. So if you're buying the trend, that's what you want to try and do. Sort of keep your stop loss far away from the current price, but make it a rewarding trade for you at the same time. So it is a judgment call, and as we know, traders live and die by the decisions they make when they trade. So if you can make consistent decisions and disciplined ones, and be patient when the time is right to pull the trigger, that's absolutely a recipe of success. And of course that takes a little bit of time.
Comments from Treasury Sec Janet Yellen reiterates her support of IMF lending, G20 debt relief and the SDRs. Yellen calling for a strong global cooperation to resolve the crisis. Comments from Yellen in the text of remarks to be made to the IMF and World Bank.
So let's label this as an opportunity. So the 40.95.
Some vaccine news. Comments from COVAX, the vaccine facility, says it delivered nearly 38.4 million doses of the vaccine, more than 100 countries in 6 weeks. They have been hit by reduced supply availability in March and April, and high demand for vaccines in India as well. They still do expect to deliver at least 2 billion doses this year.
Okay, so they're really ramping up that access to the doses, and hopefully there'll be some sort of return to normality for us, for everybody. Been an unbelievably crazy year.
More from Yellen. She's urging major economies to avoid removing fiscal support too early. Says they should strive to provide significant new support.
Yeah, she keeps talking about that, and it's coming from the Fed as well. So she mentioned that at the weekend, just to make sure you don't unwind that support too soon. It'd be like sort of pulling the rug from underneath people. Businesses and households and economies need a bit of time now to get their feet back on the ground. So as we approach the cash open, there's a little bit of sort of positivity for the euro. The pound has kind of also strengthened in line, really, but let's see what happens next. The euro pound, we're looking for this market to actually break above the 86.54. We're currently 25 pips lower, so we need a bit of the next leg to the upside, and the pound yen trade to the downside is a viable sell trade as well. So we'll keep a close eye on the S&P and the Nasdaq. Okay, while we're looking at these trades, I wonder if you could just give me 1 minute flat, and I'll be back to you in just a moment. So just bear with me while we look at these off screen, and I'll be back to you in just 1 second. Oh, sorry, 1 minute from now. Oh, apologies. Can you now hear me? Okay. I do apologize. I just pressed the mute button by accident. So can you hear me okay at this point? Sorry about that, Renko. I do apologize. I think the sound should be back now. So what I was just saying was, yeah, okay, good. So what I was just saying was, we've got these 5 high probability trades. The euro dollar is just purely just to identify, to see what's happening with the euro dollar. We're looking for some equity further moves to the upside. They are sort of well documented trades, and we're looking for that next leg to the upside. They're currently just selling off a little bit, so we just need to be a bit patient with that. And the other trades to look for is the potential for some pound weakness. Now we can see it's beginning to strengthen across the board, so we're wanting sort of prices to actually start heading in this way, and for the pound dollar for further downside. Now this has been quite a volatile pair, so yes, the pound has been strengthening, but there's been a lot of intraday volatility in the trades as well, so no getting away from that. So we can expect some further volatility, no doubt about it. But US indices to the upside, pound to the downside is the trade that we're looking for. You know, that's coming from our trade plan sessions every night, so that we can be very prepared for these opportunities when they happen. We can get out and we can get in on the breakout of those trades, or we can get in on the pullback of those trades. And we're currently waiting for the pullback opportunity to develop in the S&P 500, and we're a little bit off that as far as the Nasdaq's concerned. We want prices pulling back to this level, so at this level here, this Nasdaq trade becomes a decent buy for us. You compare and contrast that with the S&P. We're much closer to sort of ticking those boxes. So there is the same level of previous resistance, which now becomes support. So we saw the breakout trade, and now we're looking to get in on the pullback trade further to the upside. So there's your breakout, there's trade number 1, and this is your pullback trade number 2. So that's how we set up these opportunities. We do our analysis on multi-time frames. So looking at the bigger time frames, it's kind of a no-brainer. We want to trade what we see, and we've had a very, very bullish equity market now for 6-7 days. So that's the trade, and we're looking for further continuation. So if we get that, we'll be getting into them again. So I hope this makes sense, guys. Unfortunately, we do have to end the broadcast through YouTube. We do have other sessions with traders now as well, so we'll have to pack up at this point. But these are the 5 trades. These are the ones that are worth looking at, and you know, we'll be certainly looking to pull the trigger in around these levels, above or below. Red to the downside. So the pound dollar to push lower, the pound yen to pull lower, and the euro pound to actually push higher, and the 2 indices to push higher as well. And once we get into these trades, we'll be posting it through our signal service for our members. So we'll notify you with all the details once we get into those trades. So the details are currently up on screen. If there's any questions, guys, I'm happy to answer them. If not, we'll let you guys go. Thank you for joining us. Now tomorrow's Friday, so we're not running these sessions on Fridays for the time being. Pretty soon we'll be coming out of lockdown, and we'll be able to probably facilitate Fridays as well pretty soon, but not just yet. So Monday to Thursday at 12 noon. Oh, sorry, I'll turn off the squawk that we have. So Monday to Thursday at 12 noon, very welcome to join us here through our YouTube channel, completely free of charge, where we'll be looking for opportunities and looking to trade them accordingly. from a perspective of knowledge and understanding, not sort of everything's quite coherent in terms of what we do. For more information about what we offer, just go to our website. It's there up on screen, thelivetraderoom.com, all one word. And give us a thumbs up if you can, if you've enjoyed the video. If you want to subscribe to our channel, do so. We've got a lot of very interesting content coming online pretty soon. So feel free to subscribe to our channel, and we'll notify you when we go live and when we post these additional videos. So look, on that note, thanks so much. We'll see you next week. Obviously this week was slightly disrupted with the bank holiday on Monday, so a slightly shorter week than normal, but look, enjoy the next few days, and we shall see you very soon. Let me turn that off. For everyone here at the Live Trade Room, take care and bye for now.